computer this time. Okay, let's get through it. So we're going to get a little bit deeper now, but first we're going to go back over those support resistance zones. And we have a little bit of a different picture here. So we talked about decision points earlier. These are linear support and resistance zones, okay? So these are the decision points in which the institutional traders make a decision to buy or sell, or even hold, because sometimes you'll get a zone with price action that's range bound for a long time. So there's a decision there not to go high or low. It's just, just an exchange of shares. We're going to look at trend channels. Now, not a lot of retail traders use trend channels, but you've got to frame the trend. You've got to frame the price action. And a trend channel is the bigger picture, non-linear support resistance levels, okay? Visa is a prime example. That has been in a very tight trend channel for 10 years. Guess what? Almost broken out the other day. So, but it's that sort of trend channel that you need to have, that skill, because something's just gone off in my ear, a noise. Have you got an email or something? I don't know. I've got a noise in my ear then. Can you still hear me on the streaming? Please say yes, Paul. Hear me on the streaming? Yeah, cool, thank you. And then we're going to go a little deeper into ABC corrections. So these are useful for trend reversals and stochastics. So this goes a little bit away from the fifth wave, but you need to understand what goes on after the fifth wave to make a decision whether to stay in or go out or get back in again. But this leads nicely on to the next course, which is the elite training course, which we did first. It's already recorded. You were there for that, wasn't you, Sue? Yeah. So this sort of leads on to that. But it's a good way to end. It's a good way to see the picture. So we're going to use the same chart again. We just want to remind you about these support and resistance zones, really. So go through it really quickly again. So you got 3 candles there, all indecision, big wicks bouncing off. So that forms a potential support zone. We get the same sort of action again. So this is a decision point. This is a price in which, at this stage, institutional traders aren't really interested in pushing the price down, okay? They're more interested in seeing it as value and offering a little bit more money and buying some shares. Then that same zone, once pushed through, acts as resistance, okay? So this is important. You've got, when you're framing your stock, your chart, you need to be doing this on a daily time frame, okay? The daily time frame is the pure time frame because it's a whole day in the market. It's an open, a close, a high and a low. You put those days together, you get the trend or whatever it is, yeah? So you need to put your linear support resistance zones, your decision points, on a daily time frame. The ones that are going to affect the price now, or round about now, don't go stupid and get one that's like $100 below or whatever. Just be sensible. Okay, so we've seen this before. I just wanted to just highlight that it is on the daily time frame, the support resistance zones. And as long as the price is in or around there, you need to just keep extending them right on your chart every week or so. And so in reality now, any stocks you're interested in or you're invested in, you should have support and resistance zones on there like this. And you should keep them on there as well. Okay. Trend channels, you start with the weekly time frame. So we're looking for longer term trends. So we put, you see down at the bottom right there, there's their same support resistance zones that were drawn on the daily. That's what they look like on a weekly time frame. We're going to use the weekly time frame to draw our trend channel. Now, drawing a trend channel, some people find it daunting. For me, it's sort of an eye thing. Yeah. Okay. You're looking for a trend line. So look at the top of this trend channel. Look at the blue line. Okay. So 2 touches is a line. 3 touches or more is a trend. Okay. So forget the others for now. That blue line, at the top there, you've got a touch. Then you've got a touch down at the bottom right, and it runs through that indecision point there. So you've got 3 strong touches. That's a trend line. So that's the top end, the upper bound of your trend channel. Then you've got to find the lower bound of your trend channel, but also keep in mind, like I discussed before, the center line is really, really important here. So you will see I've got a touch on the bottom trend line. Use the mouse. Around about here, okay? Off screen, you won't see it in here, but you'll see it on the streaming. We've got a big wick that goes below that trend line. But I've ignored that because this is a parallel trend line. We go further down, we've got a dip below it. I've ignored that. And then you can see I'm slightly above the low here and slightly above the low here. Why have I done that? Because I'm looking where my center line is. As I'm adjusting this channel, I'm looking where the center line is. I'm looking for support and resistance along that center line on the weekly. So we can see up here, we've got a really great rejection. It comes back down. We've got another one here, and we've got support here. We've got support on this part of the center line. Got massive resistance all the way down here, and we've got some resistance here. And then recently, it bounced off and made a massive move down on the weekly as well. So your starting point, whether that's either on the bottom or the top, is critical. Then the next important thing is the center line. So you'll see the bottom line is there. You're getting the touches, but you're getting slight dips below. But it's the line of best fit. Yeah. But that's a strong channel on the weekly. We've combined the daily support and resistance zones, those decision points, because they're the ones that are going to affect it right now. Okay. If we go to the top left, they're not going to affect the price right now, are they? Okay. So we're just looking at those for now. Okay, so we can see here the main points on the channel to draw that first line. And then the center line, we're looking for really strong support and resistance zones all the way down. And that will affect us how we actually draw that trend channel. Okay. So now when we move back into the daily time frame, we can see how the price action moves between those support and resistance zones as a linear and moves within our weekly channel on the daily time frame. It gives us a frame for that price action up or down. Okay, it gives us boundaries that are non-linear because the market isn't just a linear experience. We've got institutional traders that draw these channels every day. They don't just draw them on the weekly, they draw them on the monthly, draw them on the daily. They look for parabolic breakouts and they'll draw those channels in. So it's really, really important that we get the weekly channel, the daily support and resistance zones. I won't go into parabolic and all that other stuff. We'll cover that in one of the live sessions that we do in the new year, I think. Okay, ABC corrections. Here we go. Right, I've been dreading this. Something that I do naturally every day is very difficult to teach because a lot of people don't use fib extensions and fib retracements every day, and you need to use 3 and combine all 3 here. So good job it's being recorded. So corrections occur when the trends fail or at the end of a strong trend. So you've had a 1, 2, 3, 4, 5. It's hit an all-time high. There's no real want in the market to push it any higher, so you get that correction phase. And that's when you get that ABC correction. And we can measure that correction, okay? And the idea is, if we can measure that correction and almost predict the end of that C wave, we can actually then make a decision to get in the trade again or to do a counter trend trade. So we're only going to talk about simple corrections. They have 3 swings, an A, B, C. I don't like to overcomplicate things, as I said before, because there are very complex corrections that some of these people, these Elliotticians, like to look clever, and they talk about all of these really complex corrections. At the end of the day, 1, 2, 3, 4, 5, A, B, C. That's it, okay? So our guidelines. So this will make sense when I put it on a chart, but the wave C should exceed the extreme of wave A, okay? It doesn't make much sense at the moment. I just want to go through these rules, then we'll put them on a chart. So if the market trades back into the range of wave A, the minimum conditions for a correction are complete. So that's the key sentence there. We want the correction to be complete if it moves back into the range of wave A. A trade beyond the wave B extreme is a pattern signal that the correction should be complete. So there's 3 statements there, and then we're going to put them on a chart. Okay, so we've labeled an ABC correction there. So let's go ahead. Okay, so the first one, wave C exceeds wave A extreme. So you can see from the left there, we've got the red A, we've got the red B, and then as soon as we move through that wave A high, every single high is classed as a wave C at that point. Okay, so the overlap into the range of A signals AA was probably corrected. So that's a very confusing statement, but we get that high, so we get that move above the wave A high, and that's classed as a C. Once the price action moves back into that range, the correction is over, okay? Does that make sense? Yeah? So we've had the A, the B, the price actions moved above moved above this range here. It's found a high. As soon as it comes back below the original wave A high, the correction is over. It's classed as being over. Yeah, either after a 5th wave down. Okay, so the move below the wave B low signals the correction should be over and we're in a bearish trend. Okay, sometimes we get a bounce off that B wave and we start a bullish trend. In a lot of cases, we'll go through that B pivot and the correction's over, but also then potentially we're in a bearish trend. So we're in a trend reversal state. You usually get a correction after a strong bullish trend. And at that point, all you're doing is trading a correction, not really trading a trend reversal into certain matters. And again, I'm going to do a trend reversal sort of course next year sometime, but we're not in trend reversal territory, so there's no rush on that. Excuse me. So a bit more technical stuff here. We're going to use alternative price projections and internal retracements. Okay, so these are not just to identify temporary support and resistance, primarily used to identify the probable price target for the end of an entire corrective structure. So we've had a really great move on Apple, for example, okay? We then go into a correction. It's identifying where those zones are for the end of that C wave so that the correction is over, that we can then decide whether to get back in or not, okay? We're going to use 1 Fibonacci retracement and 2 Fibonacci extensions. I'm going to build the picture using those together. So let's start. So the first one, the fib extension numero uno. So we're going to use fib levels 0.618, 1, and 1.618. So this is an extension. See the start points here? So that start point is after a previous bearish trend. Can you see that? You see the wave 5? Okay. So that's your start point. So extensions, you have 3 clicks when you're using fib extension on the chart. So your first click is at the bottom of that previous bearish trend. Your second click, point 1, is at that new high. Okay, you don't know where that is yet until it's moved back down against it. Okay, so this is we're looking further on. We're looking when we've had an AB, looking where the C should be. So we can see we've moved away from that wave 5 at the low. We've formed a pivot around about the same as the previous wave 4. That's how I know it's a correction, because it didn't break that previous wave 4. Okay, so we're not on a trend reversal. And then it comes back down and forms a slightly higher support level where the B is. Okay, so all of this has happened. You should, in your mind, say this is a correction. It's not a 1, 2, 3, because we've had, at this stage, we've had quite a deep pullback. So the third click is at the end of that, as the end point there, is at that B wave. And then those extensions are printed out. We've got the 0.618, the 1, and the 1.618. So those are potential target points for our C wave. So we can identify the end of a correction. Then we're going to overlay another one, and we're looking for points of convergence. So that's fib extension 1. This is being recorded so you can keep going over it and over it again. No. This is just to identify the correction, okay, after the wave 5. We're looking for another trend, okay? We're just trying to identify, because sometimes, no matter how good the software is, there'll always be a correction rather than a trend. So if we can use these fib extensions to actually see that ABC correction and discount that it's a 4th wave pullback, it's too deep, where are we, is a stock corrected? Especially if it's Visa in a long-term trend, are we in a sort of shorter-term trend now, or are we in an ABC correction? That's something we need to understand and identify. Yes, usually after the 5th wave. Yeah, it's sort of, the markets don't know where they want to go. It's correcting. And then whether we go long or short depends on how it reacts to that C wave. Where are we? Okay, so now the fib retracement. So this is a retracement of the previous trend. Okay, so we're going to go, we're going to fib levels 0.382, 0.5, 0.618, and then 1, because we're going to retrace the whole of the previous trend. So our start point is the start of that previous trend. Yeah. Our end point is the end of that trend. Okay. And then we've basically demarked the 382, the 0.5, the 618, and the whole 1. Okay. So we've done 1 fib extension and 1 retracement. So then we start to build the overlaps. Whoops. Hang on. So we start to build the overlaps. As you can see there, those are the 2 that we've done so far. Can you see the 0. There's the 1, okay? There's the 786. Look at this one here, 618 and 0.5. See how close they are. This then, when you start to go down on a micro level, gives you a really good support level, especially look how that bounced off there. That is really strong in that correction, okay? So that's the 2 together. And what we're looking for is convergence with a 3rd one now. So when we get 3 levels, all taken from different things, all in one small space, that's going to be a potential really strong support resistance zone. All you're trying to do is those overlaps are giving you zones where potentially it could come back down again. No, you're still using the daily or whichever time frame you're trading on, but you're mainly on the daily. Yeah. we're only doing one retracement and two extensions. We've done one extension so far and one retracement. We've put both of them together. Now we're going to do the third extension. So extension number 2 now. So we're doing fib levels now 1.27, which is really cool. C waves really hit 1.27 a lot. 1.618 and 2.62. They don't hit very often, but it is quite good. Where are we? Again, 3 clicks, remember, for an extension, for a fib extension. The start point is the B wave. So that's the slightly higher support level after we've finished that bearish trend. We've gone up. We've hit a double top, yeah, on the A wave, and then we've come back down on the B, and it's slightly higher support level from the origin of this current correction. So that's our start point. That's click 1. Point 2 is the A pivot, okay? And then you bring it back down and click back on the B pivot. So that what that does then is gives you the 1.27, the 1.618 and 262 is way up, way up. So now we've got all 3 now, and you can see the overlaps. Can you see the 1.27786 and the 1 there? This overlap here. Look at the cluster of candles around there. So again, when you're doing multiple time frame strategy trading, which is in the elite training course, if you've got, you see the inner waves here, it goes 1, 2, 3, 4, okay? That's on the 60-minute time frame, by the way. This is a daily time frame, but that from the B wave, the inner waves that they call them on a shorter time frame, that potentially is a 4th wave pullback. But we've got a cluster of candles on the daily, and also it's at a big resistance level for all 3 converging together for that ABC correction. So are you going to trade a 5th wave on the 60-minute time frame with that in mind? No. You've got the cluster, you've got all of this noise here, and you're at a big resistance level. So you just don't want to be in there. So let's put them in. Again, we identified that one earlier with those 2 really, really strong resistance level. This is the most important one for me because, again, what it does, it comes back down and it actually finds support at this previous A pivot. But we've got this cluster. We want to make sure we're out of that cluster. So where does the C wave actually find its resistance in the end? At one of our targets. We've got the start of the previous trend, which is the 1 whole one, and then we've got the 1.618 there at the top. Those 2 are quite close together. That's a good resistance zone. And then we can see another ABC correction forming. That's when you start getting corrections. But now, so what we've done is we've had a 1, 2, 3, 4, 5 down on the daily previously, which wasn't very good anyway. It was horrible. This is GCP. Then we've had an ABC correction. So what we're doing is tracking this, and we're looking for multiple time frame trades. And all I wanted to do is go at the end of a wave 5. You know, I said a wave 5 can turn into a wave 3. Okay. But also we're looking for trend reversals as well. Is it the end of the trend, or do we stay in? What happens? I really like this stock. I want to trade it on a shorter time frame. What's happening on the daily? The important thing, what's happening on the daily? And it is an ABC correction. And those are our target levels. Now, because we put them in on the daily, then when we're trading on a short day trading, for example, we get a signal to go long just before that zone. You're not going to go, are you? Even if you've got a signal that says go, you're going to go into a lot of resistance. You're going to hit your head against a brick wall. So you just don't go. It's all about framing the chart and the stocks you're going to trade. So it's a lot of work, but once they're on for this current correction, they're on, okay? You could even just take all the fib levels off and just leave the zones on your chart. The idea is it's not just about trading the 5th, it's what happens afterwards, because that stock just continues to be traded. and we need to understand how that correction and where those target levels are. Now, a lot of people do trade the C wave when it goes beyond the pivot of A. So that long there, but you can see the problem sometimes with this convergence here, this lower convergence. So a lot of people would have sort of gone long as soon as it broken that A pivot. We'd had an AB. These are my target zones here for the C wave. Let's have a go. But it really didn't work out. But it did hold us great support at the previous A wave. So when it breaks this sort of pivot here, you see how the price action really grew to the next target level for the C wave, because it broke that cluster, and there were some traders that actually trade that C wave later on, and that's what pushed it up to the one to those next levels there.
On that last part of the chart, basically it came back down, took all the support out, took all the stops down, and then went back up.
Yeah, it's tough trading, because, and then we're going to a complex correction then. If you've gone through one ABC correction after a trend, and then all of a sudden we're not trending again, you just walk away from the stock. Because if it's not trending, you can't trade it. Yeah, there's a massive rejection on that A pivot at the right. Yeah, yeah. It's a very difficult trade to do, but again, the way I use it is I put those zones on because I want to know what's going on after the fifth wave. And that's important for me, because I want to know if I'm going to stay in or not, or if another trend's occurring, or there's a trend reversal. So remember those linear support resistance zones and those trend channels? I just did the ABC correction overlaps on that same chart with the channels and the trend line. So I drew the support resistance zone in before I did the ABCs. Look how much this one in the middle is correlated by the 0.618 there, where you've got all that convergence. And I drew that in before I'd even seen it. Okay, so this just shows you that you get some very good correlations with ABC corrections with institutional traders as well. Okay, very, very strong. Now look at, we've got the center line hit coming down here. Okay, and then you've got the convergence. Look at that V pivot hit the center line and the support and resistance zone. That is really cool stuff. Okay, so then when the price comes down, you've had the A, the B. When it comes back down and breaks through that support zone, which is the A pivot, go short. You've got target zones for your C, it hits and it comes back up again. Then we've got another ABC correction. Where's your target zone there? The 1.6 and the number 1 for the previous trend converges right at the outer line of the trend channel. Okay? Institutional traders made a decision at that convergence point on that C wave because it converged with your trend channel, well, with their trend channel. Okay? It is freaky stuff, but it works. This is how you've got to frame everything that you do on your chart, daily and weekly time frames. Very, very important, because they will give you, you've got your initial support resistance zones, you've got your trend line, but if you put it, if it's quite corrective within that channel, if you're putting those zones on, you'll start to see other support resistance zones, and they're going to be critical for when you go down a time frame to trade a fifth wave or even a day trade. You need to know where it is in that channel. If you're going to day trade something on a 5-minute time frame and you're going to have to push through the center line, you're going to have to push through a support and resistance zone from the daily. You're not going to do it because there's going to be a lot of factors working against you. You need to be through that center line. There needs to be some fresh air between your entry and the next convergence level for your ABC corrections, if it's an ABC correction, but also your support and resistance zones and the trend channel. It's just making sure you've got fresh air. I'm a fresh air trader. Yeah. So again, here you can see that the 8 of it and pulling back into that that A range between A and B, which is the rectangle on there. Once it breaks that, see how quickly it goes down to the bottom of the channel. So you've had your ABC correction. The smart trade is wait for the stock to go through the previous A and into the range of this AB. Break this support and resistance zone here. Then you've got some fresh air down to the center line. Guess what? It actually breaks down through the next support and resistance zone. So you're out here when it bounces back up. When it comes back through the support and resistance zone again, you go short again. It finds resistance, it gets fine support there. And then it pushes back down all the way to the bottom of the channel. No, not in our indicator suite yet, no. Oh yeah, you'll see it sometimes, but I want it better. It's not as complex as that at the moment, but the development for next year is wanting to put ABC corrections in as well, properly. But it takes a lot more programming and coding because you've got to make sure that the priority is given to the 1, 2, 3, 4, 5, and all those rules are met. And then you've got to start putting your rules into the ABC correction. So it's not easy. Yeah, it's an and, if, not, or type logic sequence because the priority's got to be to the 1, 2, 3, 4, 5. So yeah, that's when you go short. You go short below the B there. Yeah, some traders trade the corrections. Yeah, very complex. That's a simple correction. You get complex corrections. You get A, B, C, D, E, Fs, and everything. Again, some people try to look really clever. Just stick to trade the fifth. Yeah. Okay, so the overlaps, including the two, I just wanted to show you the 2.62. So we got these overlaps right down at the bottom here. So when things really start to let go, you can see the convergence on some of those predicted levels. I mean, look at the 1.27, the 0.618, and the 1. There's some real big convergence there and a lot of price action. But once it breaks down, the next target is this convergence between 2.62, the 1, and the 1.618. They are these convergence of these three levels are really, really key to help you find all the support and resistance zones. So yeah, that's what I just talked about there. Really, really congested zone there. But look at how it breaks out. It gaps down. And you've got to go short after that, down to the 262. But again, you're building a picture. So this is always on the daily time frame. But if you've got a gap there, I mean, some people trade gaps as well, remember? You know, we're in an ABC correction here, but on a shorter time frame, that might be a 1, 2, 3, 4, 5. And if it's gapped down, there could be, because you've done your work on the daily, there's a bit of fresh air down there. And on a shorter time frame, you could have a decent entry below the low of that day, of that indecision candle. Okay, so this SH12 works. It just takes time and practice. Like anything I've said before, it is repeat. Eat, sleep, repeat. Eat, sleep, repeat. Eat, sleep, repeat. That's all the only way you can become confident in anything. It's recorded. You just keep going through it. You don't have to trade it right now. But as you go over the next few months, over the next 6 months, you can start to frame the trend, go to the weekly, to put the channel in, go to the daily, to put the support and resistance zones in, and start to frame it. And it becomes second nature to you then. It's got to be part of your daily routine. Okay?
What are your criteria as far as when you go out? Are you mostly stock person?
Yeah, it's stocks and futures.
What ratio do you use for that? Like, how much of your stock do you allocate for futures?
I allocate 15% of my account balance for day trading. So that's day trading futures and stocks. Depends, because sometimes I've got certain criteria for futures trades are quite anal, so I won't get many. So if I've got a lot of stocks trades on, I'll just ignore the futures. Yeah. But usually then, if you've got quite a range-bound day on stocks, sometimes your futures you can get some good moves. I mean, we use the black box breakout strategy, for example, get some really good, because we've got a 35, we've got a W5T EMA cloud, and we've got a black box breakout indicator, which works fantastically for futures. So, and that looks for squeezers, volume, price action, all the things we just talked about now, but then gives you an entry level. And, you know, even if you're just doing 2 or 3 trades a week with that, you can, I think we're averaging $1,000 or $1,500 profit per one contract traded on that strategy. But we don't trade, you know, if there isn't a trade in the day, we won't trade it. It's just part of your overall strategy. Yeah, and stop loss. Yeah. And it's free. Yeah, even a daily or a 5 minutes. Yeah, doing a 1 minute as well. Right. This is just purely price action, volume, and our special EMA cloud and the black box bits that we don't talk about, but it really is good. Really, really cool. Okay, so what I'm going to do now is I'm going to put some charts. So bear with me a second. Get Tink or Swim. Okay, so.
So you just jump in and buy stocks for long term when you see the really, really good value, right?
A lot of other things have to stack up. Let me just stop the recording a second. Does that say stop?